Welcome to the first topic of the course, Introduction to Financial Management. Finance is the most important subject you will ever encounter. It is at the core of everything you will do in business and management. It is very rigorous, challenging, and practical. It is something that you use and will continue to use in your day-to-day lives, both as an individual and a management professional. So what is finance? Finance is simply mathematics plus money. It's a systematic study of financial transactions of money. Does that mean you need to have very intricate knowledge of mathematics? The math involved in finance can range from very basic high school algebra and pre-calculus to extremely complex applications. However, for this introductory course, the financial and statistical calculations required are high school level algebra and pre-calculus. Now let's look at the language of finance. The basic language of finance is accounting. You will use many accounting terms like assets and liabilities, stocks and bonds, income and expenses, and most importantly, cash flows throughout the course. Therefore, it's important that you have a fundamental knowledge of accounting in order to understand finance. Now let us look at the participants in the world of finance. In order to understand the world of finance, we need to know who participate in this world. There are 4 types of participants in an economy, as you can see in this figure. Type 1 participants are those who have no extra money and no economically viable business ideas. Type 2 participants are those who have extra money but do not have any economically viable business idea. Type 3 participants are those who do not have extra money but have economically viable business ideas. And type 4 participants are those who have both extra money and economically viable business ideas. Of the 4 participants, let us first focus on type 2 and type 3 participants. Type 2 participants are those who have extra money but no economically viable business ideas. While type 3 participants are those who do not have extra money but have economically viable business ideas. Now, type 2 participants are generally those who are looking for good investment opportunities to invest their extra money. They could be individual investors or bigger entities. Individual investors may not have too much extra money separately, but together, when we aggregate many individual investors, there will be huge sums of money available for investment. Type 3 participants, on the other hand, may be entrepreneurs, startup firms, or research and development departments of a corporation. These participants typically are looking for investors to invest money in their business ideas. Financial markets allow the type 2 participants to invest their money in the ideas of type 3 participants in the form of ownership called equity or in the form of borrowings called debt. So financial markets essentially provide the mechanism to exchange these monies and rewards between type 2 participants and type 3 participants. But sometimes all the profits and monies earned by type 3 participants do not reach type 2 participants. There are some parts of the profits that are held back to finance future expansions. These are called retained earnings. Some parts of the profits are paid to the government in the form of taxes. Now, all these are basic cash flows of finance. Type 1 participants have neither the money nor ideas. Hence, they cannot participate in the financial markets. Type 4 participants have the extra money to invest in their own viable business ideas. So, they do not need the financial markets in the manner type 2 and type 3 participants need them. Having learnt about the various participants of finance, let's look at the fundamental challenges of finance. There are just two challenges of finance that one will encounter in life, be it one's personal life or professional life. These challenges apply to all the four participants in an economy. They are valuation of assets, things, services, etc., management of those assets, things, services. We will look at this topic in further detail in the next video. So in this video, we learned four important topics. The first one was, what is finance? The second one was about the language of finance, being accounting. The third one was four different participants in an economy and how financial markets help them to interact with each other. And the fourth one was fundamental challenges of finance.